Hello everyone and welcome back to my channel. The S&P 500 has been choppy and so has the market. And this is what I want to show you. A strategy that's called high classing your portfolio. It is a perfect time to do so when you are presented with the right opportunities to hold on to generational companies that you don't have to worry about in the future. Some sectors are hit much harder than the S&P, it's only down 4%, but sectors like the IGV, which is an index that tracks software names like Microsoft, is officially in a bear market. It is down 21% year to date. And that is because all the uncertainty going on and oil prices are going through the roof, recently going over $100 per barrel. You presented opportunities that you normally don't get, and it's time to high class your portfolio. That way you're set for the next 10 years without even worrying about your money. First company I want to talk about, it is Microsoft. In the past 6 months is down 26% from the highs, and year to date is down 21%. So this is officially what I consider in a bear market. A company that's never really goes down that much, rarely does, and getting an opportunity to buy it at $2.7 trillion with a PE ratio of 23. This company is cheap, and let's look at why. So you look at the annual revenue. As you can see here, Microsoft is going up 14% on the revenue for the year. And let's look at the quarter. So revenue, they're making $81 billion in a quarter with a net income of $38 billion. Very, very good. And as you know, Microsoft is the second largest cloud provider in the entire world. Around 20 to 22% of the cloud is owned by Microsoft, and that is Microsoft Azure. And if you're looking into AI hype, they have a 27% ownership stake in OpenAI. So, Microsoft, and we're not talking about the other stuff like they have, like Microsoft Office and all these products. You're looking at the AI build out with the partnerships and the ownership stakes of OpenAI. They got in very, very early. Now they own 27% stake of it. Microsoft right now is a company that you can buy every single week, dollar cost average, and you will thank yourself because you're getting an opportunity. And I guarantee you, you will not time the bottom. Microsoft will recover before you would think it will bottom. And you're like, man, I missed it. The next company is Amazon. So the theme here is don't overthink it. There is great companies out there trading at a great price, and you could just buy companies like Microsoft and Amazon a lot safer than your savings, and they will compound for years. Year to date is down 8%, and in the past 5 years is only up 35%. So Amazon's kind of lagging, but its time will come and it will shine. Amazon is a business that dominates anything that gets his hand on. As you can see here, this is his quarterly. We're talking about just a quarter, $213 billion in revenue with $21 billion in net income. And if you want to look at the annual numbers, $716 billion in revenue with net income of $77 billion. I could see this hitting $1 trillion in revenue, and it will continue to go there. And the more it starts to invest in itself, Amazon is investing heavily into robotics, and which is gonna increase the net income to be a lot more closer to the revenue, when the profit margin will increase heavily on Amazon. As you can see here, Amazon legit, anything it touches, it dominates. It got into logistics, and now it is second largest behind USPS and is over UPS and FedEx. We talked about the robotics side. They just recently acquired, sorry if I mispronounce it, Fauna Robotics, and they're investing heavily. Robotics is heavily used in Amazon warehouses, and that kind of takes away human labor and is going to increase the profit margins for Amazon as well. We were talking about the OpenAI in terms of Microsoft. Amazon has invested $8 billion in Anthropic a long time ago, which now gives it roughly around 15 to 19% stake and Anthropic, and that is the company that makes Claude. So we heard about Claude. Right now, it's probably the best AI model out there. Claude is amazing. You can do amazing things with Claude. And Amazon pretty much is that $8 billion valued at $60 billion. So great partnerships. Amazon will continue to dominate. Again, don't overcomplicate it. Buy great companies at great prices. The next one is Meta, and the past 6 months is down 22%. Year to date is down 8%, almost 9. I think Meta is a great company. They're very profitable, as you can see here in the quarter. A revenue of $59 billion with net income of $22 billion. And if you want to compare an annual rate, revenue of $200 billion and net income of $60 billion. So the thing is with Meta, it invested heavily into the metaverse, and recently it started saying we're going to focus more on AI and kind of get rid of that metaverse, which is kind of funny because they named the whole company from Facebook to Meta. And by doing so, kind of $80 billion went into, the toilet, pretty much. So they had an amazing vision by Mark Zuckerberg. It didn't kind of go to the way he expected it to be, but in reality, by them committing to the metaverse, it actually helped Meta keep up with the AI race. Interestingly, the AI that was supposed to power the metaverse is currently what's saving Meta's bottom line. AI driven recommendations on Instagram and Facebook, pretty much a discovery engine, and AI optimized ads are the primary reasons their stock hit record highs in 2025 and 2026. So their AI was able to provide recommendations to people. So your feed on the Facebook platform, Instagram, Threads, or whatever you're using became more lucrative for Meta because now they're able to target you with ads and sell you stuff that you want or are looking for. So by them doing that, they're able to pivot quickly into the AI race, and they were able to do that because they were able to hire the world's top AI researchers. And if you think about Meta's model recently has been buying the biggest talent and the best talent. They went after OpenAI's engineers, and they went after Apple's. Now, recently they went after Google, and now, as you can see here, Meta hires formal Google and Stripe executives behind AI startup Dreamer. So when the market gives you an opportunity to buy generational companies at great prices, it is time for you to look at your portfolio, get into high conviction names, especially when they're companies like what I talked about, Microsoft, Amazon, and Meta, because these companies will compound at a great rate for years to come while your money is safe and you don't have to worry and stress. So high classing your portfolio during on times of uncertainty is a blessing in disguise because you get prices that you may have never seen before and an opportunity to create generational wealth. I hope that helps, and I'll see you on the next one.